Good afternoon. Thank you for joining us today to discuss ROK Resources Q2 and operational update. ROK trades under the ticker symbol ROK on the TSX Venture, PTDRF on the OTC, and they also have freely tradable warrants with a strike price of 25 cents. The company has been extremely busy absorbing their company-changing $72 million acquisition from FCL, which we discussed on the last two webinars in April and May. With us today from the company are Cam Taylor, Chairman and CEO, Bryden, Wright, COO, as well as Jared Lukomski, Senior VP of Land and Business Development. Congratulations on a great quarter. I would like to quickly touch on the quarter and have a deeper dive into your operations for the first phase of drilling that you completed thus far. You did release an operations update on the 8th, so we can touch on that and how the back half of the year looks for capital spending. Now that you have a good handle on your assets and have had some great drilling success. So if you want to, I'm not sure who would like to go ahead first. Cam, do you want to start with your quarterly highlights?
Yeah, we'll let Bryden walk through some.
Bryden, okay.
Highlights.
Sure. Yeah, so the second quarter, we were quite pleased with kind of how everything shook out. So we took over the assets on March 7th. So our first full quarter was the second quarter, and we averaged just over 3,000 BOEs a day, which did exceed our budget that we had previously released, and that was primarily due to some non-capital optimization, some production flatter declines on a few wells, and some shut-ins that didn't last quite as long as we had expected. So it was a good quarter operationally. We exceeded both our net revenue and NOI by about $4 million, give or take. So again, we were quite pleased with that. Obviously, strong pricing in the quarter, coupled with our hedges in place, resulted in a quarter that we were quite happy about. We did have a bit of a delay on our capital program rather, and that was just due to really wet conditions in southeast Saskatchewan. So instead of starting, in mid to late May, we didn't get going on that drill program till, I believe, late June. So, in terms of our CapEx program, that was delayed a little bit because of that. But overall, we were able to continue to pay down that debt, amass some working capital to put forward on the capital program, and put us in a good position for the rest of the year.
Okay, great. So as far as the FCL assets go, do you feel you have a good handle now on what you've acquired, and how is the integration of staff, et cetera, going?
Yeah, I think we're getting there. We've been able to get our Calgary office integrated with ourselves, and got that team working full speed ahead on the Kaybob property. I think our accounting is up to speed now. Still a few little things left to integrate there, but for the most part, we're up to speed and things are on time. So yeah, I think that first phase of the integration has gone well. Field operations has been smooth. So I think we're happy with everything in terms of how the integration's been going, and be able to make some progress with our growth plans in both provinces. So starting to get excited about this second half of the year and our ability to start growing the various assets.
Terrific. Now, you had awesome timing on the purchase of this asset as far as price goes. And what do you think the current value would be today on this asset base?
Yeah, so we did have great timing. We set the price to $72 million back in October of 2021 in a different oil and gas price environment. At Q1, KPMG valued that acquisition $58 million higher at 130, and our PDP's 114 million, and our proven value is 143, sort of at that date. So I think we've increased that asset. The value of that asset has increased a lot just through the improvement in the commodities.
Okay. And then, I mean, we can, you've only completed 4 wells so far for your first phase of drilling, but I think probably safe to say that the reserves that are fairly conservative are very conservatively booked on this asset. Again, if people don't recall, there hadn't been any money spent on this reserve base since 2016. So, with what you've been drilling, et cetera, there should be some additions there as well as just on a price basis, I would suspect.
Yeah, I think that's fair. I think we've got, we've drilled 4 wells already, had a really good discovery at Florence that I think made the top well in Saskatchewan for the month of July at 300 and some barrels a day. And we'll be following up there within the next few weeks.
How many offsets do you think you have to that? I mean, we don't expect them all to be 300 barrels a day, BOEs a day, but
the Florence property's got 5 wells producing, and it's got 6 wells in the reserve report, and we think we've added another 5 offsetting this well. So that little property has got some great growth ahead of it, and we expect this first well to pay out in 3 months, and we'll be drilling the second one here maybe 3 weeks from now, and just keep moving that property forward. Southeast Saskatchewan has got some exciting drilling. We've got about 20 days on our well at Gainsborough and some more activity planned there through the rest of the year, both operated and non-operated, and be moving over to a very important follow-up well at Steelman in about 12 days. So I think Southeast Saskatchewan, we've had some really good results with the first wells, and we're in the middle of a drilling program, 5-well drilling program to follow that up. So expect once we get that done and get all these wells on production, we should have some good updates and be able to project what our future drilling in those properties looks like.
Okay, so do you want to go into a little bit deeper on Steelman, perhaps? Just given that was a fairly new property for you. You drilled a vertical just to test the property, and now you have an offsetting horizontal you're going to spud. Do you want to give a little color on how, I'm not going to hold you to anything here, but what this is offsetting Surge's Steelman, which is what, about 6 miles away?
Yeah, so the whole Steelman-Wilmer area is a pretty important area in the industry right now. We're seeing a lot of the really high flow rate wells in the Frobisher coming out of that. Surge has been drilling some great wells about 4 or 5 miles to the west. We just picked up some more land at a land sale, and we've had a good discovery. We're licensing a bunch of horizontals. We're expecting to move to the first follow-up horizontal in about 12 days. Just finished drilling the first well of our 5-well program at Wilmar's, just north of this area in the Frobisher. So this is going to be a really active area for us, and there's a lot of follow-up drilling for us as we move forward in this area, and the IP rates are allowing for some very quick payouts in the Frobisher and this Wilmar Steelman area. So yeah, very exciting area to be involved in, and lots of industry activity in here with really strong economics.
And as far as you said you were successful at a land sale, pricing as far as land, has it been increasing with the success we're seeing there, or dramatically?
Yeah, dramatically increased. It's the highest land prices we've seen now, I would say, since before 2014. Industry is very competitive. Lots of public and private companies starting to pay up heavily for lands in that area. So very aggressive land sale results in the immediate area.
Yeah, because we've seen pretty big exodus as well in Southeast Saskatchewan of big players like Crescent Point, etc. So there was a period there where you could get some pretty good deals. Now you're obviously, people are revisiting the area. On that topic, M&A wise, are you seeing stuff for sale? Is there a lot more property coming properties coming up for sale in Southeast or in Alberta that are of interest to you?
Yeah, I can't speak too much to Alberta. Alberta's been a little more of us reaching out to offsetting landowners for tuck-in acquisitions, but Southeast Saskatchewan in our core operating area, there's a number of privately held assets that are available that we think are interesting to us. There's also some packages that are expected to come out here shortly. So I think there will be some interesting M&A activity here over the next 4 or 5 months. That seems to be an active area right now.
Okay. Now, your second half program, you touched on it a little bit. When do you think that should be complete as far as stuff that you are operating?
Yeah, so we have a 5-well program. We've just finished the first well, moving to the second one. Bryden, if you're going to pick an average, some of these are dual legs, some are a little bit longer. If you're picking an average sort of full cycle time for that well, what are you going to pick for?
Yeah, well, I think with our next 4 wells, I'd probably put us at, about 30 to 35 days, depending. The one well at Steelman is a strat horizontal. So assuming success on the strat, we'll drill horizontally from there. And so that adds a couple days. So yeah, it's give or take. We should be done that program in a month.
Okay.
By end of September, should have the drilling done. And, it's just cleaning up, getting service rigs on and getting things on production. Most of these locations we're plumbing directly into existing facilities. So we don't have any long flow lines to build, just a short flow line over to an existing facility. So most of these we should be able to bring them on production fairly quickly, pending weather cooperating. And then we have a fairly aggressive non-op program going on in parallel. We're going to be seeing wells drilled, 3 wells in Southeast, 7 wells that we're participating in Southwest and in the upper and lower Shaunavon, and then 2 wells up at Kaybob. So a lot of non-op activity going on in the background as well.
Yes, you just stole my next question. Thank you.
Perfect segue. Well, and I do want to note on those non-operated wells, we're anywhere from 20 to 50% working interests. So we do have some, lower working interest stuff as well, but in core areas of ours and, wells that could still add significant production, just given the potential IP rates, specifically in Southwest Saskatchewan.
Now, you've had your workover program, been active on that. Bryden, do you want to touch on how successful you've been there, and how much the costs are and how cheaply you're adding barrels, etc., and the technical success?
Sure. So we had 2 programs planned, or I guess, for the core over the course of 22, one in Alberta, one in Saskatchewan. Our Saskatchewan program got pushed again just due to wet conditions. So that is just beginning or just begun about a week or 2 ago. So that's just starting, and that's basically looking at 5 or 6 wells, workovers, reactivations. So a little bit smaller scale. I'd say that's hoping to add maybe 30 or 40 barrels a day, fairly low cost on that. And then in Kaybob, bigger program, some low-hanging fruit though on gas wells that had been shut in for a long period of time with the previous owners. So we did a 5-well workover program at about $75,000 per well. That's gross. We added, and so on that for our net working interest, we were anywhere from 20 to 62%. Even though we were the operator, we actually had 20% on a few wells. So we spent roughly $150,000 net and added, it would have been about 80 BOEs a day. So a very good return in terms of the capital we spent. So on that 80 BOEs a day, I'd say it was about 70%, maybe 60% oil, 40% gas. There was a good balance. And then we did a mill out on one of our Cardium wells as well. And that was a well that had been shut in, fracked and shut in for a period of time. And there was just some issues downhole. So it was a well that was drilled 3 or 4 years ago. and it was down about 10 barrels a day. And so we did a mill out on that well and brought it back on. It's been climbing. I think we're at around 50 barrels a day today. So a successful operation. And that costs around $750,000 to get that milled out and on production. So overall, we spent just shy of $1 million, and we've brought on, I think, just under 140, 150 barrels a day of production. So, successful program in Kaybob. We have another 8 wells targeted for reactivation, some of which have some infrastructure requirements, some of which are just, pump changes, but, need a, compressor overhaul, things like that. So that's going to be the bigger program looking into late 22, early 23 in Kaybob. So lots of activity out there and lots of exciting activity.
When you talk about this, the mill out that you did on this Cardium well, are there others that could?
Yeah, we have one other that was twinned. That's basically directly, I guess, east of this location that requires that as well. So we will be looking at that, in the future. It's a better performing well. So we do think we targeted the lower performing well purposefully just to see what the mill out would do and what we could bring that well back up to. But we do have offsetting reserves that now will be treated favorably because of the success.
Okay, great. On your offsets, they're turning under to developed, hence your question about the offsets, or I'm not quite clear on this question actually.
Adding locations, I think, is the question.
Yeah.
Yeah, are we drilling up booked locations?
Up your PDP, or you are adding new locations? I think
let's pretend that's the question and answer that one.
Okay, let's do that.
Yeah, I think each property's unique, but overall we targeted these areas to grow our location count. So yeah, we are adding new locations and not just drilling up PUDs and probables.
Okay. Yeah, the Florence location for an example was a booked location, but it was booked very low. And by drilling that, not only did we increase the value of that location, but we added 4 more that were not on the reserve book right offsetting. So strategically, we're trying to drill wells here that'll grow the reserve report as well, not just drilling up our PUDs.
I think that's really key to focus on, especially because, people could make the assumption that, you hedged a lot of your production, you're just blowing down your PUDs and that's it. And that's not the case whatsoever. Really, you're adding quite substantially to your reserve report. When do you expect to drill your first Montney well? I mean, obviously the gas market's looking extremely exciting, and it's going to for quite some time. But when do you expect that will, do you have a rig lined up, and do you think that'll be January-ish?
Don't have a rig lined up yet. We're just working out whether that is an accessible prior to freeze up location. We think it is. So we're busy talking to those service providers right now and trying to get an answer for that question ourselves. And I think typically in that area, it's a safe bet you can like that in mid-December onward, but we're actively looking at whether we're able to bring that forward at all. And so still working with the service providers to establish that date. Okay.
And cost wise, I'm going to ask, I should have asked them both there. I'm sure you're seeing costs go up a little bit. I mean, there's been inflation everywhere. In Southeast, are you seeing cost inflation on your wells still, or it's kind of staying pretty flat now? Or
yeah, from the point of time we put out our budget, so let's say in March, we've definitely seen an increase in costs,
which we discussed.
Yeah,
since then.
Yeah, no, since then I think we haven't seen a bunch of hikes. We're seeing, again, it's kind of that 30 to 50% range depending on what the service is, so it's substantial. But I guess it's hard to predict what it'll look like in 6 months. So we're trying to order, the big ticket items like pipe, line pipe, casing, and tubing, ahead of time, so that we have an inventory on hand, as well as pump jacks. We do have quite a large.
I think if you go to a whole well cost, though, what we budgeted Southeast Saskatchewan, one of these horizontals at $1 million, we're currently seeing 1.2 million as a reasonable cost estimate. Bryden, like,
Yeah, those used to be 900,000, 925, and they're at 1.2 now. So
Well, I think in your presentation there, yeah, you have them at 1.2 now. Yeah. So but I guess my question is, have you seen much increase since then, moving them up to the 1.2?
Beyond that, no.
No. Okay. And then in the Montney area, I mean, that could be a little bit more competitive, but I also wanted to, Paramount does surround you guys there. Do you see some opportunities for, some land swaps, etc.? Because it's not a real area of focus for them, but more of an area of focus for you.
I think, Jared, you can speak to that. I think it depends on what zones. The zones we're interested in down to the Montney, where we're currently producing, that is not a part of the stratigraphy that they're focused on right now. I don't think you're going to see Paramount trading out of Duvernay and Montney in that Kaybob South area. But the uphole stuff that feeds into our infrastructure really well, they
okay.
open to.
Yeah, very high level in Alberta. We've definitely identified some targets on some potential swaps or lands that we'd like to target. And, we'll continue to do that and look for opportunities ultimately.
Okay. Current production is about 3,300 BOEs a day. I mean, I realize it's a bit, you had to shut in some production for a little bit, and then you do have some non-op. But you have forecasted 3,500 BOE a day exit rate. It looks like that may be light. Not to hold you to it, but you have a lot. You're drilling a lot, and the math doesn't really work to get to stay at 3,500.
I think if we keep if our budget on the operated side remains consistent with what we put out, which is our intent, and then you include all of our non-op increase to our budget, we hope to exceed that 3,500 BOEs a day at year end. I think right now we're in that 3,300 BOE day range. We do have we shut in some gas, on the Alberta side due to the outages with TC and the constraints there. So we have shut in some production temporarily. And that was purposefully done just to avoid any, negative gas pricing. So that should be back on. But all in all, if everything's producing, we're in that 3,300 BOE a day range and growing.
Okay, great. So on the same band here, so your debt was 65 million in March. You've obviously been, as per your quarter, paid it down faster than anticipated. Given your increased production and the fact that you, of course, have your astute hedges of 75%, close to 75% of your production at 93.61 over the next 2 years, do you anticipate being lower than your year-end debt target of 26 million?
Yeah, I mean, I would expect that, obviously dependent on pricing through the remainder of the year, but that is our goal. And obviously net debt includes capital, working capital. So it really depends on our fourth quarter program and how much capital we're spending on, with the drill bit. And then I guess when we see that revenue, that trailing revenue. So I guess simple answer is yes, that would be the hope or the plan. But it really depends when we're talking net debt on capital spending. Okay.
So you want to see, so if you're done your program, I think by Southeast Saskatchewan by the end of September, the non-op stuff, it's a little bit less in your control.
Yeah, we less control on our end. We believe we'll be done that probably early November is my best guess, weather pending. So we will have some fourth quarter spending associated with our non-op program.
Okay, so when can we see an update? We had originally discussed probably October-ish for an update regarding, guidance. That may be pushed a little bit later, do you think?
I think third or fourth week of October is the earliest that we would expect to have all these wells on production, the operated wells on production, and in a way that we can sort of evaluate them and look forward a bit. So I would say at the earliest, third, fourth week of October, we get delayed a little bit by weather or or other things, it can stretch a bit from there, but somewhere towards the end of October, we should know what's happened in all of this current drilling program and how the wells have come on and that type of thing. So,
okay. Now, back to your debt. So if we do see, the debt repayment happening as quickly as we think, you could be debt free by the end of next year, pending there's a lot of variables really. What's your ideal debt target regarding, debt to cash flow?
Yeah, I think a half times debt to cash flow is a good safe number, and provided there's a little bit of hedging in there, that's a comfortable level where I think we start getting flexibility with our working capital. And then, the only other issue, we'd definitely like to get through that first season of drilling at Kaybob. So we get through our Q1 program at Kaybob and understand where all of our areas have landed post drilling, and then we get our debt down to a half year's cash flow. That's a comfortable place where we start to get some line of sight forward and some flexibility on what to do with working capital.
Okay. Would you consider paying back to shareholders at that point, depending on the, again, your success and how quickly you want to grow? And as far as acquisitions, again, there's so many variables at this point in this cycle, but would you consider, implementing a small dividend or something like that?
Yeah, I think that's a reasonable thing to consider and look at. And once we get through all that drilling and we sort of understand what the opportunities are in front of us and what the IRR on those look like, we'll have to make some decisions on what's in the best interest of the shareholders in the short term there. But definitely that is one of the things to put on the table.
Now you've built, 4 other companies, actually more than that, privately. Is this the most exciting time you've ever seen as far as opportunity and from both a macro standpoint and from the ability to acquire interesting assets, or are you finding it more challenging?
No, it's definitely a phenomenal opportunity right now. Like, we still strongly believe that there is a structural shortage of oil and that we're going to see a strong price deck through the next few years. So, that part of it is extremely exciting. The acquisition side is still looks like it's at PDP or slightly above. So that's very, very good pricing on opportunities. And the amount of drill opportunities that are here right now in front of us on this asset is probably the most exciting we've ever had. So yeah, it's a great time right now. And, there's a lot of short-term volatility and a lot of issues in the news that are affecting the short term. But I think structurally, with the kinds of growth opportunities that are in front of us and our belief on the structural side of the commodity, it's pretty exciting.
Yeah, no, certainly. And the physical market is not necessarily being represented in the volatility, the way oil's trading. And then, of course, with natural gas, I think we're in a very, very long cycle for that, of double-digit natural gas prices in the U.S. For the foreseeable future. But unless you're Trudeau, you don't see that. Anyway,
we don't want to go there, Jess.
No, let's not go there. We're gonna be going. And so again, so I'd hate to see you guys sell too early because, of course, you've had great success in selling, but with all the opportunity in front of you and the skill set you have in depth in your management team, where do you foresee yourself, in 18 months, 2 years?
Yeah, so I think we're very focused on the growth opportunities in front of us, expanding that reserve report and the cash flow right now. I think our business plan right now is to grow Southeast Saskatchewan by 1,500 barrels a day and grow kBOB by at least 1,500 barrels a day. And even though those numbers are equal, they're based on a couple of specific opportunities. At kBOB, it's the Montney gas 2-mile horizontal we're planning, and in Southeast, it's this whole set of wells that we're drilling right now and setting up for a future drill program. So this asset, I think we understand it well enough, and we've got some drilling to do. I think kBOB, we want to leave ourselves two winter drilling seasons. So I think 18 months-ish, 18, 20 months is the right number for us. But with the growth, we're going to see some modest growth in Southwest, and there's continued growth at Weyburn. So, you know, all of that, those areas put together for us probably take us over 6,000 barrels a day, BOEs a day by the end of that Q1 2024 drill program. So that's the target. That's what we're focused on. And at that point, we believe we'll have a strong cash flow and a big drill list. And at that point, that's what we have to take a look at what we've got ahead of us, what our capital looks like, and we'll figure out the next stages from there. But that's everything we're doing right now is focused on that growth over this next 18 months.
If you look at our resume, I think we're serial sellers. That's no hiding that. But to Cam's point, because of that, we know how to organically grow companies. And so him speaking to that extra 3,000 barrels a day, that's just, drilling up this asset base. So that doesn't include any of these tuck-ins that we're, currently evaluating and looking at, and that, we're cautiously optimistic that we can include some of those to grow our inventory of locations and obviously to grow our asset base. I think selling's always an option down the road, but I do think we're very focused on both acquiring at the right metrics in addition to drilling organically, which, we know how to build and sell companies. So very exciting times.
Yeah, I mean, it's phenomenal for you guys. And again, there's not many groups, and if we've talked about this before many times, but there aren't many groups with your youth and your technical abilities to grow to actually build a company organically that are public. So you're in a tremendous position, I think, at this time. Now, one question on your debt. I mean, it's obviously you had to do the debt that you did in order to close that deal. Is there any chance of that being refinanced? I mean, I can answer that for that person. I mean, you're obviously talking to providers and looking at options to get cheaper debt. I mean, the bigger you get to, the more likely you could get an RBL, something like that.
I think the answer is if you were offering us some cheaper debt, Jessica, we would take it. So if you have that handy, we'll take it. We are talking to other players about.
I charge you more. I charge you more myself.
Yeah. So that's obviously strategically something that's important to us. I think we get into the beginning of 2023 and all of our debt ratios, hedges, everything speak to an ability to just replace that with conventional prime plus 2.75 or 3 kind of conventional debt. So there's a time coming ahead of us that's available. And I think along the way, if anytime we can find a way to reduce the expense of that debt, we'll certainly be looking at it.
Okay.
Just a reminder that the debt that we currently have has no prepayment penalty. So if a good option exists, there's no penalty attached to that.
Yeah, you can pay it back and then there's no issue. And again, we've talked about the reserves being conservatively booked. This person's asked, what's your discount to 1P? I think your 1P is 46 cents. Is that about right?
I think that sounds right. I assume that question, I just pulled it up as well, was the discount on PDP in terms of acquiring, because Cam was talking about that when the question was asked.
Maybe that's what he was referring to.
Perhaps that's the question.
But
anyways, I can answer that question. I wouldn't say we're seeing a discount to PDP right now on acquisitions from an ask perspective. I would say, PDP to a slight, add to that number. It's, they're not looking for 1P at least the groups we've been chatting with. But, I don't think you're going to see too many discounted PDP numbers on the M&A market anymore. Would you agree with that, Jared?
Yeah, I would. And I think there's a lot of variables with that. And part of it is location count, acreage size, undeveloped type of asset. So there's a bunch of variables that go into that. But certainly we're not seeing prices reflective of what we got the FCL transaction for, which naturally makes sense.
Yeah, but I think this volatility should help certainly it can help or it can hinder. But if people are putting packages out, like I've heard they are in Southeast Saskatchewan, that are pretty sizable, they might be, if we start, continue to see some pressure on oil because of macro recessionary concerns and if, et cetera, you might have sellers be a little bit more reasonable on prices.
Yeah, I think that's you mentioned it. There's not a lot of consolidators out there in the space. And we think we can play a small role in that, consolidating anything from 100 BOEs a day upwards of 3,000 BOEs a day. And there's a lot of product. So we think we're well positioned to be able to take advantage of those.
Perfect. Is there anything that you guys feel I've missed? Kind of jumped around a little bit. Oh, yeah, there are a couple of things I'd like to say. I mean, when we did our first couple of webinars, at that point, you had just done the FCL acquisition. You'd gone from 200 barrels a day to 3,000. Now the stock has done extremely well. We've turned over the float and then some. And you've also had two research pieces come out, one by Research Capital and one by Beacon just last week. So you're starting to really get, even though your multiple is egregiously cheap compared to the rest of the group, with a better growth profile and you're delevering, I think you're just starting to hit people's radar screens. And I think you're just at the cusp of being one of the, getting to a much better multiple at this point, would be my final closing remarks.
Yeah, I hope so. We'll definitely put some hard work in here over the next 3 or 4 months just to make sure we get introduced to all of the players that are interested in energy and make sure everybody does know the name and starts to follow the story. So
perfect. Well, I think there's no more questions from the audience. And I think I've asked everything I wanted to. Anyway, great. Thanks so much for your time. And I hope we covered anything. If there's anyone else who has questions, you can email me at jessica@adcap.ca, or if you'd like a meeting with the company, happy to arrange that for you. And appreciate your time this afternoon, guys.
Yeah, thank you.
Great. Thank you very much.
Thanks,
Okay.
Jess. Thank you, guys.
Bye.
Bye.